Welcome to the Breakthrough Advisor Podcast. In this podcast, we inspire advisors with ideas and pathways to break through barriers and build a thriving retirement income business. We will interview innovative technology developers, business leaders, and successful advisors, then help you organize and execute these ideas to move your business forward.
Hello, this is Jack Martin. I serve as the virtual CMO for InsureMark. We're a 38-year-old financial distributor of annuities, life insurance, and long-term care policies based in Houston, Texas. And we do this Breakthrough Advisor podcast as a way for ambitious financial advisors, whether they're wealth, annuity, or life advisors, as a way for those ambitious advisors to level up their practice. And so as a firm, we're firmly committed from a mindset as well as from a resource commitment to helping you build a more successful and sustainable 21st century retirement income planning business. And certainly the work you've done over the last couple of years has been amazing. And this year probably has presented a lot of new challenges that some of you may not have ever faced before. Inflation can be a sticky monster to try and handle, particularly with client portfolios as they look at that long tail on retirement. So a lot of new challenges, a lot of regulatory changes in the water, a lot of things swirling. And so as we start to talk about this idea of how we level up as financial advisors, we're super excited to have Keith Berger, who is the head of distribution for North America for Luma Financial Technologies, come on to talk about how their firm is helping advisors navigate through these swirling waters. Keith, welcome to the Breakthrough Advisor Podcast.
Great. Thanks, Jack. We really appreciate the opportunity to join you today.
We've been big fans and we're customers and big supporters of Luma. Share with our audience a little bit about how you and your firm are helping our advisors in this environment today.
Yeah, absolutely. Luma Financial Technologies, we offer a structured note platform in addition to an annuities platform. And the end game goal with our platform is to try to help be an end-to-end platform to help make issuing this business easier. I firmly believe that annuities are an incredible fixed income alternative. And in the past couple of years, and certainly don't need to enlighten astute advisors on this call with the challenges presented in the fixed income marketplace. But I think the annuity product in particular makes a tremendous complement or alternative to those fixed income instruments. Yet these products have historically been fairly difficult to research, fairly difficult to transact from a back-end book management, not as efficient as other types of investment products. And the Luma platform helps to try to solve some of those problems through technology.
Boy, that's a mouthful. And obviously, we support you 110% on the notion that annuities are becoming more and more important. You think about how the boomers are entering the stage of retirement and starting to get in clearer focus, this idea of longevity. And certainly, the annuity is the only vehicle I'm aware of that can guarantee to take that longevity risk out. What are you finding with the advisors you're working with?
Yeah, absolutely. Whether it's taking advantage of one of those lifetime income products with a built-in living benefit, I agree with you. I think it's one of the very few, if not the only product out there that can effectively guarantee a stream of income in retirement and do so very efficiently. I think there's a lot of just tremendous products. I'd also add that just from a pure accumulation standpoint, a lot of the products out there, whether they're fixed index annuities, or in many cases, fixed annuities, or perhaps even investment only variable annuities. All of these products, I think, also provide that protected growth story, which I think is so powerful. So you can really look at these products filling a number of different needs. The Luma technology can help advisors to more efficiently research what some of those ideal alternatives look like, model them out in terms of how to best allocate those products, and then provide a comparison across different products and across different asset classes or annuity types, all inside the Luma framework.
That's really one of the things. Our proprietary version of Luma, folks, is called Clara. And for us, this is a hugely important part of our value proposition to be able to give you, the advisor, clear visibility into the different types of annuities, whether it be FIA, MIGA, RILA, whether you want to do that from a brokerage or from an advisory perspective. And then when you get inside the product, particularly the RILAs and the FIAs, this whole unraveling, this whole thing with all the new index strategies and crediting methods that are in there. Keith, I think one of the things that we were super excited about was the analytics that you provide around annuities. Can you talk a little bit about what advisors can expect to see there?
Sure, absolutely. So two of the most popular annuity asset classes over the past few years have been fixed index annuities along with RILAs, or registered index linked annuities. They've been two just tremendous asset classes. And we provide some really exciting analytics in both of those cases. If you take a look at the industry in both asset classes, you see industry flows of around 65% going into S&P 500 annual point-to-point crediting strategies. And to a large extent, that makes sense because that's been, first of all, a very successful trade with the S&P doing what it's done over the past decade plus. But it's also a very understandable, easily consumed strategy from a client perspective as well. So it's a very, very positioning to make. However, it's also an extremely expensive trade for the insurance companies that manufacture these products. It's a very crowded trade. So as a result, you may not have the full client value that some of the other strategies may offer. But the challenge is a lot of those other strategies are hybrid indices, which can take some time getting your arms around in terms of exactly what you're offering. Our technology will look through both FIA and RILA allocations, look at every conceivable return combination on an efficient frontier, and then be able to compare and contrast maybe an S&P allocation to another allocation with a combination of different hybrid strategies, maybe some S&P mixed in there, maybe some fixed mixed in there, and be able to really, really quickly help you to target an allocation that may provide better client value through technology. So really tremendous value add there from our efficient frontier. And I think it also starts to get this product line a little bit closer to some of the analytics and research capabilities that you've got with advisory, where you've got some unbelievable tools in market today. And this, I think, is the front end of some better and better analytics for the industry.
That's such a critically important point to make. Back in the day, it was all S&P 500 all day, all the time. And the industry has evolved a lot. Folks, if you haven't listened to one of our Laurence Black podcasts, go back and check it out. He's the founder of Index Standard. And what they do is analyze indexes. And they'll enlighten you about what the moving parts are. And they'll tell you where the bodies are buried. But the thing that I like about Luma is this optimization thing you were just talking about, Keith, where you can see the efficient frontier, you can see all the plots, and literally you can, from whatever allocation you choose to start with, if you look due north of that on the efficient frontier, you're going to end up with something that gives you a higher rate of return and something that gives you the same level of risk or gives the client the same level of risk. And so what it does is expose more opportunities for clients, but really gives the advisor more clarity into what's going on there. Obviously, then the next step of that is there are a lot of annuities out there. And so how do you compare apples to apples? So that gets to be a little bit of a challenge. I think you guys have done some things there to help the advisor get clarity about that, right?
Yeah, absolutely. So once you dig in and start to narrow down to 2 or 3 different products, as an example, maybe you're looking at a couple of index annuities and a RILA. From there, you can then do that allocation we just talked about and say, maybe this is the ideal configuration. And then from there, you can compare multiple annuity products, and you can look at the projected growth based on historic performance, from taking into account today's cap rates or participation rates or spread rates. And then you can also take a look at a projected income based on that, again, that same historic performance, and then looking at the payout scheme for that given, in this case, income product. So you can compare either income products or those accumulation products, but you can compare across those. From there, you can print out that analysis and save that for your records. And, I'm thinking from a regulatory standpoint, for anyone that's processing electronic business on the Luma platform through an automatic order entry system, you can actually attach PDF output from that, and then that'll actually travel with that application as well. And again, being able to say, me as a financial professional, I went through a process and I took a look at multiple different alternatives, and here's why I selected the product that I selected. So I think, it all kind of comes together pretty holistically in that fashion.
The changing regulatory environment is reality, and Reg BI is something all of us fiduciaries are dealing with today, but more so probably in the future. The insurance-only advisor is probably going to have to deal with some form of that. Is this something that they can use to help them not only gain insight, but provide some documentation for their compliance?
Yeah, absolutely. At the end of the day, I think in the majority of cases, when you're talking about regulators, they tend to want to see what is your process? What did you go through? How did you come about the decision that you came about? I don't think anyone holds financial professionals to perfection looking in the rearview mirror, but they do want to know, hey, did I use a consistent process? And absolutely, this comparison of multiple different products, and also the ability to take a look at a broad range of different products and rates for those given products being right on the Luma platform, it can absolutely be part of that process.
As the head of distribution, you probably got your ear pretty close to the ground. What are you hearing, on this regulatory front?
I think you nailed it. I think it's there. It is going to continue to expand and be part of this business forever. At the end of the day, I think much of what is being put in place is all very well intentioned. Many times this regulation candidly isn't perfect, but I think, directionally, I think there's a lot of folks trying to help do the right thing out there. But, it is absolutely on the financial professional and the firms that they deal with to try to make a best effort at staying in front of that. So, yeah, I don't think it's going to stop anytime soon. But, we're there to try to continue to help build out technology to try to help stay out in front of that process.
As you start to think about what you're doing at Luma and evolving that, I assume you're pretty tightly engaged with what's going on in financial advisors' practices. So what are the pain points you're hearing from them about their annuity business, the annuity part of their practice?
Sure. So I think when it comes to product selection, it's a matter of how do I quickly and efficiently take a look at all the products that I'm able to sell at my given firm. How do I quickly wade through that and start to hone in on some appropriate products and strategies? That would be probably the first part of that. In addition to that, there's still quite a few paper contracts being written out there. And as a general rule, the entire industry hates paper and it tends to take a lot longer to process. And there can be also more NIGOs associated with those contracts as well. In a number of different ways, we have integrations with various different order entry systems, and we can actually expose firms to that as well. If you're dealing with a firm that does not have access to automatic order entry, so we can help to automate that process as well in terms of processing those trades. But Jack, I'd say one of the most exciting pieces of what we offer too is called Lifecycle Manager. And with Lifecycle Manager, we're able to work with the DTCC and be able to take a look at the financial professional's entire back book of business. And then all in one spot, they can see that they've got a number of different contracts under management. Take a look at some of those different policy values, maybe a living benefit value, see how those contracts are currently allocated, and then be able to see when do I have, an anniversary coming up? When is a contract coming up out of surrender charge? And you can do that all inside the Luma platform without having to remember 10 different carrier passwords or the fact that you sold a contract from XYZ insurance company 12 years ago. And it's just a really nice way to get your arms around your business in a more consistent, cohesive fashion.
Hang on a second. So what you're saying is that as an advisor, getting access to data, understanding the data, being able to see the data about my business is critical. So I've been able to do that, with my investment accounts, my assets under management for a long time, to be able to see it on a dashboard, what's happening, with all of my clients' positions. And so what you're saying is that now from an annuity perspective, I can have that kind of visibility as well?
Absolutely. And at the end of the day, there's a lot of good self-service carrier websites out there where you can go in and do those withdrawals and make beneficiary changes, et cetera, et cetera. But that, again, it boils down to you being able to have get your arms around what contracts are under management. And many advisors have sold these products for 15 or 20 years. That can be potentially a very large volume of contracts that they've got under management. Now it's a great way to help keep organized and keep it all in one spot. And it's a really clean way to get your arms around your business, your book of business.
So one of the things we preach to advisors now is to think about their client experience and how they enhance that. And certainly the consumer's expectations about that experience have changed in the last few years. You think about our experience with Amazon or DoorDash or Uber or something like that. And so what I hear you saying is that now advisors can have the data at their fingertips to be able to say, here's all my people across all of my different products, all of my different carriers. Here are the people who are having birthdays today. Here are the people who are having policy anniversaries. Here are the people who have strategy renewal dates. And I have access to that at a glance on a daily basis. Is that about right?
Yeah, 100%.
Wow.
And exactly. And in order to engage with that, the firm that adopts the Luma platform has got to have access to those DTCC feeds. And that's typically a fairly easy process if your firm is not already set up with that. That's number one. And number two, the insurance company needs to provide those DTCC feeds, but that is virtually every major insurance company out there is dealing with DTCC. I actually can't think of an exception to that. Those two elements do need to align, but that's pretty common that they do. And as we look at usage of our platform, that is one of the highest usage elements of the platform is that lifecycle manager, because it is so critical. And you're making that point. Clients do expect more. Regulators, frankly, expect more in terms of being able to really manage your client base, and a great opportunity for new business, of course, as well.
Our platform is called Clara. We're leading by example. We're big believers in this. And I have to agree with you that the response to Lifecycle Manager has been amazing. So you talk about opportunities for new business, and certainly that's a part of the value here. What kinds of situations are you seeing advisors using the Lifecycle Manager for?
Yeah, at the end of the day, I think clients, they really want to know, and they want to have confidence that, their advisor staying on top of all elements of their client's portfolio, whether that's, the advisory book or whether that's, a portion of their annuities. So I just think anytime that you're doing those regular, thorough check-ins and being proactive with clients and managing your book of business, I think that's that great opportunity. And when it comes to being able to do a review and say, hey, look, we're coming up on an anniversary. We've got the opportunity to make some reallocations for your portfolio. I'm recommending we head in this direction. And then that can absolutely lead to that new business conversation. Oh, by the way, we have continued to see some challenges in fixed income portion of your overall portfolio. I'm going to recommend that we shift an additional portion of your allocation into a similar annuity product. And here's why. So I just think it's a great way to kind of create that muscle memory of those regular client check-ins. And then the value of these products across the board, I think is unmatched.
Yeah, one of our newest clients is a large broker dealer with almost $30 billion in AUM, and they've installed our Clara platform as their annuity solution for their advisors. And for them, they look at advisory, they look at brokerage, they look at fixed, they look at variable, they look at RILA. They're able, and these are guys that are super productive. They don't have time to make phone calls to wholesalers or surf to different websites or whatever. And certainly their admins don't. And so what we're hearing is rave reviews about how this data is flowing in. So big kudos to you guys. That was a major development. Anything new and exciting that our listeners should know about with respect to the annuity marketplace or with respect to what's happening at Luma? What are you seeing?
Yeah, well, first of all, thank you for the great feedback. And yeah, we've seen some really great flows there. In particular, RILA seems to be a real bright spot out there as well. But I would say, broadly, again, we continue to see some really good strength in the FIA, the fixed index annuity space, and the RILA space. We've also seen a big recent resurgence in SPIAs and DIAs, which have been pretty sleepy products for a number of years with the interest rate environment, but we're really starting to see some really quickly improved payouts. So we're seeing some strength in that space. But I would say to answer your question a little more broadly, the advisory annuity space is an area where we continue to see some growth. In my humble opinion, not enough growth. I think these are terrific products. If you take a look at some of the advisory annuity products that were manufactured, call it 5 or 10 years ago, when this space was first getting started, they were to some extent kind of a Frankenstein version of an existing brokerage product. So basically just take an existing brokerage product, strip out the commission, and put it in market. There were some decent solutions, but candidly not like today. Today, there are a lot of very intentional advisory products put out there by insurance companies that have got better client value, and it's going beyond purely just stripping the commission out, but it's taking that commission out, putting value back in the product for clients. But where we're seeing the most success in that space is in firms that are able to set up effectively taking care of that billing themselves, because that continues to be the big challenge in this space. So we have over 84 different advisory products on the Luma platform today that are accessible for trading, but it's really incumbent on the firm from a best fit standpoint to be able to handle the billing for that client out of a alternative or sidecar account. But if you're able to accommodate that, there are some really great values out there in those advisory products, and I think it is probably a direction that the industry will continue to head. Long answer to a short question there, but
no, it was excellent. As we start to wind down, so what I've heard you say in the last few minutes is, if you're an advisor who's been looking at doing annuities or who's done a little bit in the annuity space, it's time to take a second look at that from a fixed income alternative perspective, as well as from a longevity risk perspective, a sequence of returns risk alternative. If you're a power user of annuities and you want to make your practice more efficient, then you need to get some technology in place that's going to feed you data and is going to simplify your process of not only making good client recommendations, but documenting those from a regulatory perspective. And to keep your eyes open about the types of annuities that you're using. Maybe the types of annuities that you've used in the past, be it, MYGA or fixed only, maybe it's time to look at some of the other alternatives, but at the same time, make sure you've got analytics so that you can see through all the moving parts that are in a lot of these annuities. So those are very good takeaways, I think, for our audience. Thank you, Keith. So tell us as we close, what are 2 or 3 things that you do when you're doing podcast or driving distribution that might surprise our listeners?
Great question. Full disclosure, I'm proud to say I'm a bit of a annuity and structured product geek. So I spend probably far too much of my time looking at and researching those products and thinking about that space. But that being said, I'm lucky enough to live in Colorado and love taking advantage of summers out here and hiking and biking and fishing and golfing, and certainly take advantage of those things. But there's been quite a bit of increased travel here recently as an industry. And so getting out on the road and helping spread the word about all these different great products. You're not going to find a bigger advocate for the products that are being manufactured, both from annuities perspective and also structured product perspective. And at the end of the day, clients out there, they understand equity market volatility. They know stocks go up and they go down, and eventually they go up over time, and that all makes sense to them. Fixed income volatility, clients don't tend to understand. And I think there's a lot of different solutions out there that can help advisors to alleviate some of those concerns and turn that negative concern into a potentially positive outcome for clients. So I continue to make a habit of answering short questions with a long answer, but I'm just a big fan of kind of where we're headed as an industry. And I'm proud to say technology, I think, is an increasing part of where we're headed.
No, thank you very much. Those are great insights, and you guys have been great partners. And we look to continuing to expand that relationship. So, folks, if you're listening, if you're just checking out annuities, you want to take a deeper dive and look at the analytics and see if it might work for you. If you're a power user looking to, make your business more efficient and optimize, your recommendation to clients. If you're an enterprise looking for a solution that's going to help you in this new world of compliance and making sure that client interests are taken first with respect to annuities. If in any of those circumstances, you can click on the form that's on this page where you got to the podcast, or you can give us a call at InsureMark. In either case, we look forward to speaking with you. This has been a great session. Thank you very much, Keith. And folks, we look forward to seeing you on our next podcast. Thank you very much, and have a great day.
Thank you for listening to the Breakthrough Advisor podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of InsureMark. The content has been made available for informational and educational purposes only.